Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Here's what's coming up today on Squawk Pod.
6 weeks, gone from animal spirits to a wait-and-see attitude. That was a really quick turnabout.
What version of the economy does President Trump want?
I think the tariffs are going to be the greatest thing we've ever done as a country. It's going to make our country rich again.
Trump 2.0 charging ahead on tariffs, no matter the cost. Will the White House take possible short-term pain for long-term gain? The Commerce Secretary categorically ruling out a recession this year.
Like Howard would know.
The president's chief economic advisor, Kevin Hassett, joins us today with his own rosy take on America's financial future.
There are a lot of reasons to be extremely bullish about the economy going forward, but for sure this quarter there are some blips in the data, including the negative GDP Dow.
Plus, tariff trouble hitting small business, a Mezcal brand founded by a real housewife of New York, how Bravo's Erin Lichy prepped for a trade war.
Tequila can have, it only has to be by Mexican law 51% pure agave, while the rest can be additive heavy. No one knows this because they don't have to say it on their bottles. Mezcal by Mexican law must be 100% pure agave.
Well, we're the real housewives of Squawk, I think.
All that today and much more. It's Monday, March 10th, 2025. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernen and Andrew Ross Sorkin. We're here a little bleary-eyed because really it's 5 a.m. on the East Coast.
It's a good debate to be had
We haven't quite
about
gotten
whether
used
we
to the
like
earlier
whether we like the
daylight savings
or
Daylight
not.
savings. I thought you were going to talk about whether we like the near-term pain, long-term.
No, that's what it is. It's the near. That's what you have to decide.
But I'm talking about for the
in the
market.
moment.
I'm talking about for tariffs in the market.
And I'm talking about the near-term pain of daylight
I
savings.
mean, Trump says. I saw someone say he's playing Volcker, and he's.
I thought the same thing. I didn't hear somebody say that, but I thought the same thing. This feels very much like what Paul Volcker.
Trump 2.0 is nothing like Trump.
No, 1.0. No, because he's really kind of digging into these tariffs,
We'll see.
talking about the revenue that they expect
We'll
to.
see. I think there's a Trump put not too much lower.
What's the S&P down by about 6% from the high?
That's before today. And I was not disparaging Howard Luck. Like I don't think that's what he's got to say. When I said, how would you know there's a recession? Nobody knows.
He said it pretty emphatically.
I know.
Right. That was the wow.
And you should say that.
But it's the soundbite that gets cut.
Company man, you say that. But nobody knows.
Yeah.
And
President Trump himself was much more circumspect about it all,
right.
saying we don't know, and it's nobody's going to rule out something
We've
like
talked
that.
about the Atlanta Fed. They get these crazy numbers, right?
Yeah.
But they're already negative. That'd be one quarter already under our belt. You only need two, don't you? But I don't think they're going to be
the
right.
classic definition.
But I can't categorically tell you that the Atlanta Fed is wrong.
No.
Who's this? Who is reading?
Meantime, President Trump dismissing some of the business and market concerns surrounding early moves by his administration. In a Fox News interview that was taped last week that aired the past weekend, Trump said broad, quote, reciprocal tariffs will go into effect on April 2nd. He said his goal was to build a strong U.S. economy. And to that end, he said, quote, you can't really watch the stock market since America has a short-term, quarter-by-quarter focus, whereas he said China has a 100-year perspective. Asked if he was expecting a recession this year, Trump responded by saying there will be a period of, quote, transition for the economy. Commerce Secretary Howard Lutnick was more forceful on NBC's Meet the Press about it.
Should Americans brace for a recession?
Absolutely not. Anybody who bets against Donald Trump, it's like the same people who thought Donald Trump wasn't a winner a year ago. Donald Trump is a winner. He's going to win for the American people. That's just the way it's going to be. There's going to be no recession in America.
Lutnick acknowledged that tariffs could make some foreign-made products more expensive, but he maintained that American products will be cheaper. Did not really address, though, the other issue, which is American companies investing, frankly, in America, which is to say that even though these tariffs are here and you could argue that they are meant to try to get people to invest, a lot of people are sitting on their hands waiting to try to just figure out what's exactly happening. And that's, I think, going to be part of the story we are going to hear if and when we get to a larger conversation about where the
couple of big headlines that he's gotten, which were welcome. Taiwan semi and a couple of the.
Sure, but most companies are not investing right now and are not putting money to work.
They're not putting capital work in anything because
they don't know what's about to happen.
Exactly. Well, I feel like the weird thing is in 6 weeks we've gone from, or 6.5 weeks, gone from animal spirits to a wait and see attitude. That was a really quick turnabout, and it's hard to say that that's could be blamed for anything more than the rapid changes and fluctuations.
Well, just uncertainty is the enemy of investment. Just what it is.
And then the Journal assigned a story to someone. Go back and look at how long tariffs were on, and see how if it's transitory, we think, hey, you put them on, you take them off, it goes back to normal. And the Journal's take is that it can, the effects of the tariffs can often far outlive how long the tariffs are on, for years.
I believe that.
You do?
Yeah.
Well, that's definitely the concerning side to worry about, I guess. But they haven't quite gone on yet. And
well, that's the point. They haven't gone on yet, and they're keeping people to the sidelines. I mean, that's the craziest part about this.
Anecdotally.
I think it's more than anecdotal at this point.
We'll get the numbers eventually. I mean, the jobs numbers were very similar.
That's the question. Do you believe it, or are these backwards numbers? Is this happening so fast? That's
if the market's a leading indicator.
But if you look at the Treasury market, maybe as an example of the yields are dropping
that I'm looking at, and I've talked about it now a couple times last week.
What, the animal spirits?
I still think that mergers and acquisitions is the ultimate
barometer
of confidence in the boardroom about doing things. And so if January means anything to you, those numbers were down 30%. It was as if we had gone back to 2015. The January numbers were literally 2015 numbers in 2025, 10 years later. Okay, so let's see what happens in February. Let's see what happens in March. I don't want to oversell the January thing. Maybe it's a blip. But that actually is, sometimes that's a backward indicator, but sometimes it's a leading indicator.
And that would indicate some headwinds that people see.
Right.
Which must be pretty offsetting since the deregulatory, Alina Khan's gone. Right. So that's supposed to be a tailwind.
Right.
So if you still
hesitate.
If the tailwind is totally muted by the headwinds, not just muted, but actually down, maybe you're right. That's only January. And all those
let's see what February numbers are like.
Yeah.
Right. Well, February only had 28 days, I think.
This year. Tesla shares this morning, if you want to check it out, are off by about another 3%. For the 1 year, still up by 45%, but for the year to date, it has been a pretty difficult ride. With today's move, that stock has given up almost all of its post-election gains. It's been down for 7 straight weeks. It's the worst run since the company went public 15 years ago. Tesla shares fell about 10% last week, and they are down 43% from their high in mid-December.
Meantime, the Financial Times now reporting that wealthy Chinese investors are funneling tens of millions of dollars into private companies controlled by Elon Musk. The FT says this includes XAI, Neuralink, and SpaceX. The investors are using so-called special purpose vehicles to invest in the companies without having to disclose their stakes. Now, the use of those investment vehicles is commonplace. So I don't want to say there's anything crazy about it, and there's nothing illegal about the arrangements, but it does raise some questions, and that's what the article is doing about the potential for what they say is undue influence and conflicts of interest with Musk's role in advising President Trump.
And speaking of President Trump, denying reports of a rift in his administration between Elon Musk and Secretary of State Marco Rubio. Details have emerged about a tense cabinet meeting last Thursday. We talked about this actually last week. We talked about it on Friday, during which Rubio and Transportation Secretary Sean Duffy criticized Musk for firing their employees. Over the weekend, the president posted a message to his social media network that Elon and Marco have a great relationship. Any statement other than that, it's fake news. DJT Musk chimed in on X saying, "We just had dinner together, good conversation." But it was after the president had somewhat, I guess he made it more clear who's in charge of firing. And it was an odd edict that came out last week that said the department heads are solely responsible, which supposedly resulted from a conversation where Elon Musk said to Marco Rubio, "You haven't fired anyone in the State Department. You only fired one person, and that was the Doge person looking into," and it supposedly got contentious. So yeah, this was already out. We had already discussed this.
Yeah.
Doesn't mean it's not newsworthy, though, I guess.
Yeah, anytime you get more details on things.
On Friday, the Trump administration said it's pulling $400 million in grants and contracts from Columbia University. It accused the school of failing to do enough to squelch the anti-Semitism on campus. In recent weeks, Columbia has set up a new disciplinary committee, ramped up investigations into students critical of Israel, but those efforts evidently didn't go far enough for the White House or to prevent what's really happening on Columbia. Education Secretary Linda McMahon said for too long, Columbia has abandoned the obligation to Jewish students studying on its campus. And on Saturday night, U.S. immigration agents arrested a Palestinian graduate student, Mahmoud Khalil, who has played a prominent role in the pro-Palestinian protests at Columbia. Reports say that his wife is a U.S. citizen, 8 months pregnant, and he holds a U.S. permanent residency green card. The Department of Homeland Security said it had arrested Khalil because what his activities have done were aligned to Hamas and led to some things that could be, I guess, considered criminal activities. But it's a very gray area here. In a post yesterday sharing a news article about the arrest, Secretary of State Marco Rubio said, "We will be revoking the visas and/or green cards of Hamas supporters in America."
Okay, so what do you think of this? And the reason I say it, I find obviously the anti-Semitism and all the protests, I'm not, obviously abhorrent all of that.
We're probably the same.
Okay, hold on. But then...
No, I don't think...
What I don't know
right.
is, especially this administration, which is arguing that they are free speech, free speech,
no,
free speech.
I understand that.
And
Elon
you
don't
Musk
even have to explain
all
it.
this stuff.
We get the issues, but
and then,
if what he did
and it's like wokeness is we should be arrested and this should be arrested. Like, I just don't know.
I don't understand what the charges are against
If it was just
enough.
leading a peaceful demonstration,
right.
Obviously the free speech issues are paramount. If it's intimidating and chasing
100%.
and causing,
I agree.
Destroying parts of the campus and making it impossible for Jewish students to feel safe on campus. I think I do.
Well, you're pushing. No. But it's very interesting how.
So initially, my knee-jerk reaction was get this guy out of here. That was my immediate. The more you think about it, if it was like I said, if it was purely just.
That's what I mean. I don't understand the charges.
But if it's radical and hurting policemen and pushing through barriers and really hurting or eventually a Jewish student loses their life or something like that, then
100%. Trust me.
I wondered if we'd talk about this. And then you got,
I'm just saying
you got the Post kick the guy out, ICE kick him, and you got the Daily News.
By the way.
Sparks outrage.
I have no love lost for what's going on for this gentleman. I don't know this gentleman, but I don't agree with him. I don't like what he's saying. All of those things. All I'm saying is this administration has taken some very interesting positions about this idea that everything's free speech, but then they're suing, media organizations. They're taking money away from universities. I mean, there's all sorts of things going on here that aren't completely
even with Elon
consistent. Let's just say
Twitter is open until you criticize. It's like do what I say, not what I do. You see a lot of that. This one, I think the colleges. I think they haven't done enough, and I think it's a.
I didn't realize he was living. This protester was living in a university-owned
even though
apartment,
he's graduated.
Even though he had already graduated. Yeah. That's where you wonder
what
he's
just there to educate.
I'm not. By the way, I'm not defending this guy.
He's just there to educate.
I'm not either. But I don't understand why the university didn't do something more.
You'd even use this guy if he gives you a chance to criticize the Trump administration.
I'm not.
I know. But
I'm not doing that at all. I'm just saying that there's a larger issue, not about this guy. Let's take him completely out of it.
That's who we're talking about.
Well, I'm not talking about him. I am not talking about him.
But is it okay to just take someone's green card or whatever just because you don't like their political views? But then again, like I said, if he's agitated to the point where someone's been hurt or property's been damaged, it's like, then I could see it.
Property's been damaged?
Yeah.
We've pardoned people who have damaged our property.
I understand.
In the United States.
I understand.
On the Capitol.
I understand, but this has a different connotation of being of harassing Jewish students. And when you damage the property, they're unsafe. They're spending $90,000 a year to go to this place, and they can't even go to
Tell
class.
it to the guards at the Capitol. I mean, right? I'm just saying that this whole thing, there's nothing about all of this. I'm not defending this guy at all. I'm just saying
one's a pardon, the other is a green card getting taken away. You're mixing a lot of different metaphors here.
Justice is the broad. The broad question is what does a consistent form of justice mean? And is this a consistent form of justice?
You're not going to get that in the last administration or this administration.
Well,
I'm not suggesting it, but shouldn't it be the ideal?
It should always be the ideal. Just that we live in a real world.
So you're fine with that?
No, it's just that you want the ideal world when this guy's president. You didn't give a crap about it.
That's not true at all.
Okay.
It's not true at all.
Tease will be next.
Coming up on Squawk Pod, we head to Washington, where our own Eamon Javers reports on this market shift coming from the White House.
This is a much more populist Trump administration than in the first term. The president now dismissing stock market losses as pain for globalists, not his voter base.
Then we hear from the Trump administration's National Economic Council director, Kevin Hassett, who argues we're on the right track. Just wait and see.
The deregulation is already underway, and the drilling, baby drilling is going as well. And so there's a heck of a lot of uncertainty that's resolved. I think that in the end, the trade policy uncertainty is the one thing that people will see, and that is going to be resolved in early April, as President Trump has said.
Welcome back to Squawk Pod. It's Monday on Wall Street and in Washington, and the U.S. government set to run out of funding at the end of this week. The president and GOP leaders have endorsed a plan that would largely continue current funding from now until the end of September. And the House is expected to vote on this continuing resolution as soon as tomorrow. Passage would avoid a government shutdown. A shutdown in the early days of a new administration is exactly what President Trump and his team don't want. It's terrible for messaging on the White House's ability to problem solve. And those optics are especially critical as the president's team works out how to talk about the economy. Treasury Secretary Scott Bessent left some room for softness when he was on Squawk Box just Friday.
Could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending.
You can hear that conversation in its entirety in your Squawk Pod feed. It is the episode just before this one. But does this acknowledgement of weakness, of possible pain, mark a shift in Trump world? Here's Joe Kernen.
President Trump is speaking about the recent stock market volatility. Eamon Javers joins us now with more. Hey, Eamon.
Yeah, good morning, Joe. In an interview with Fox News yesterday, President Trump addressed last week's stock market turmoil caused by confusion around his tariff agenda. In one exchange, the president suggested that calls by the business community for clarity on that policy are just a talking point for the big globalists. Here's what he said.
I think that they say that. You know, it sounds good to say. But for years, the globalists, the big globalists, have been ripping off the United States.
And asked if he's okay with the stock market going down, the president dismissed the idea of short-term focusing on the stock market.
What I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
And you can't go by that.
Now, that's a striking departure in approach from the first Trump administration when cabinet members suggested that the stock market was a good barometer for how well the administration was performing. But this is a much more populist Trump administration than in the first term, and you see that reflected by the president now dismissing stock market losses as pain for globalists, not his voter base. We'll see if Trump continues that approach later today when he's expected to meet with top technology executives at the White House. We expect the discussion there will include the president's tariff agenda, also his call to repeal the Bipartisan CHIPS Act. And guys, Andrew, I was thinking about this morning. You and I were at a dinner in New York on Thursday night where the discussion was largely around this. Just how populist is this Trump administration, and how much do these stock market losses move the needle inside this White House? And I think it's a different calculation this time than it was last time around.
it may be different in this particular moment. The question is, if this were to persist for several months or longer, how you think that changes the dynamic, which is to say, if the stock market continues to fall as you were to walk into midterms, for example, does that change what they want to do, or do you think that they're all in?
So I think there's an intellectual group who are all in, of populist, conservative economics folks who look at this and say what we need to do is entirely restructure the U.S. economy. And the focus for too many years, too many decades, has been on lowering prices, not on families and communities. And that's really the central unit of the economy, should be the family, not prices. And you heard Scott Bessent, the Treasury Secretary, say this last week, that the ideal of the American dream is not about access to low prices, it's about other things. That's that sort of worldview. The question is how much pain Trump himself is willing to tolerate. I think the answer is he's willing to tolerate a lot more pain on the stock market, as you just heard him say, this time around than he was last time. But I don't think that's indefinite, right? I think there's some threshold larger than it was last time around at which the president might respond to stock market losses by changing course politically. I think we've got a ways to go, though, before that happens.
Yeah, it's not just how deep, but also how long.
And he can point to interest rates too, Eamon, which don't always, the bonds themselves don't always sync up with equities, and you could actually say, equities coming down, and as a result, bond prices go up with the safety, and then he would immediately talk about mortgage rates and consumer loans and all the benefits that come from that. So you can kind of have, you can pick something else to brag about if the stock market is not cooperating.
Yeah, and it's largely about jobs, right? I mean, so one conservative economist looked at this and said to me, imagine rolling back the clock to 1990 and telling somebody in a small town in the American heartland, look, in the future, your TV will cost 10 times less, but your children are going to have to move out of your town because there won't be any work for them. Would you take that deal? And he said that 90% of Americans would not take that deal, even if it meant cheaper TVs because of the devastation of their community.
Can you get the jobs back, especially when you're talking about automation of factories at this point? I mean, and how long it takes to put some of those
things in. That's the huge gamble that this administration is making.
Like a 75-incher, or what are we talking
debating
about?
Whether you'd take the deal?
No, I would not. I would not.
I mean, how many kids do you have, right? I mean, it's that calculation too.
Exactly. Oh my God. These are really big questions when you think about it, Eamon. And here we are. We're in our little gilded cage. I mean, it really was hollowed out, the center of the country. And we do love those cheap prices, but it came at we'll see if prices really do rise, and it takes time to bring jobs back. And one might happen before the other, and we'll see what our actual resolve is.
Which I think you get back to this reminds me. Oh, go ahead. Go ahead, Eamon.
Yeah, I was just going to say, I think that's what Trump was talking about in that soundbite, where he said what you have to do is build a strong country, not look at the stock market, right? He's signaling that that's his priority, is rebuilding that industrial heartland of the United States. Now, whether that's doable or not, as you guys point out, is a huge open question. Whether it's doable in any kind of time frame that lines up with political and economic reality is another question. But that's the goal that they're setting out to do here. It's a sweeping change, and it's not the sort of Chamber of Commerce, George W. Bush Republican Party that we've seen in past decades. This is a Republican Party that's very focused, again, on family and communities and workers. And that's a totally different approach.
Yep. All right. Thanks, Eamon. Hey, Hassett. He is here today.
Hey,
Kevin has. Tell us everything's going to be okay. Can you do that?
Yeah.
Let's just start with that. Allay our fears, recession fears, inflation fears. The president acknowledged that maybe we have to wait a little bit, and that we're not a country that gauges its success completely on the stock market. That it could be, the heartland repopulating with great jobs. Is that your story?
Yeah, let's think about near term and then medium term. Near term, we've got a Biden economy that, still most of Biden policies are in place. If you look at the Atlanta Fed GDP now number, it's showing negative first quarter, which is kind of, if you like, a metric of the inheritance of President Biden. A lot of that is also from a big increase in the trade deficit, which, as you know and you've been covering, Joe, is happening in part because people are anxious about future tariffs, and so they're stockpiling. And so that's a very, very temporary phenomenon. I think that medium term, what you're seeing is the biggest tax cuts in history, a massive deregulation, a productivity boom from artificial intelligence, and tariffs, which even if you take the high-end estimates of the tariff revenue, they're going to be just a tiny fraction of the size of the tax cuts, which are almost surely going to be in place by the summer. So if you're thinking about like what's going to happen to capital formation in the U.S., if you take our cost of capital measures, it goes up 10, 11% over the next year. There are a lot of reasons to be extremely bullish about the economy going forward. But for sure, this quarter, there are some blips in the data, including the negative GDP Dow, which are related both to the Biden inheritance and to some timing effects that are happening ahead of tariffs.
The main criticism, I think, even among financial types of the Biden administration was the inflation. Even people that didn't like the Biden administration have to acknowledge that the jobs picture was strong through most of the Biden administration, and the GDP numbers were strong. Maybe it was Keynesian. Maybe there's something comes home to roost from all that spending. Maybe that's what you're talking about. But you don't consider any of the current possibility of a softening economy. You don't think it has to do with the uncertainty of you don't think Trump owns any of that? I think, even someone that was right in the middle would not immediately attribute the soft. I'm seeing it on Twitter constantly. How's this guy doing now? How's that feel? How's winning feel with the economy? And they're not tying it to Biden, Kevin. They're tying it to some of the uncertainty from the Trump administration.
Well, let's be clear, though, Joe, that last year the Biden numbers, we kept getting these great jobs numbers, and then by the end of the year we see that they're revised down by a whole million. And so a lot of the numbers that looked kind of good at the advance release weren't good in retrospect.
Well, they were still pretty good, and that was a technical thing.
No, even then. Technical, a million jobs is more than a technical thing. But the thing that I would say is that uncertainty, I have a paper that Matt Jensen and I wrote, we published a while ago, on the impact of uncertainty on the economy. And basically what happens is when there's a lot of uncertainty, people who have big projects, like you got to nail down a new factory or something, tend to wait for the uncertainty to be resolved. But what I'm seeing in the jobs number, for example, is that the uncertainty is actually creating jobs in the U.S. Right now, we just saw 10,000 manufacturing jobs created in the U.S., 9,000 auto jobs, and that's after losing 110,000 manufacturing last year. And so what's going on with the trade policy, which is a small fraction of the overall policy, is that it's starting to have the intended effect of onshoring activity in the U.S. Now, people talk about the prices. What about the price of this, the price of that? Don't forget that when you increase labor demand in the U.S., you increase wages. Do you think, Joe, that real wages are going to be higher a year from now after we have the tax cuts and some tariff policy and deregulation and AI? Are real wages going to be higher? Well, yes, of course they are. So therefore, the welfare of Americans will be better off, and real wages decline for 3 of the 4 years under Joe Biden. And so I'm very optimistic about the economy, but I'm also mindful of the GDP down number, which is a very, very temporary phenomenon, I think.
So are you foreshadowing if there is a recession, it's going to be Biden's? You're going to call it Biden's recession? I think the Commerce Secretary said there won't be one. The president seemed to at least acknowledge the possibility that there could be some near-term, I don't know if you call it weakness, but there could be some near-term disruptions, I think he said, from some of the policies that...
I'd just be very wary, Joe, of conversations about recession or not, given that we had 2 negative quarters. That used to be a recession under Biden, and then that wasn't a recession. I think that what's going to happen is the first quarter is going to squeak into the positive category, and then the second quarter is going to take off as everybody sees the reality of the tax cuts. Like, everybody's talking again a lot about uncertainty. For sure, there is some uncertainty over exactly how the trade policy will work itself out, but the tax policy is almost sure to work the way people are describing it in the House and the Senate bills. The deregulation is already underway, and the drilling, baby drilling is going as well. And so there's a heck of a lot of uncertainty that's resolved. I think that in the end, the trade policy uncertainty is the one thing that people will see, and that is going to be resolved in early April, as President Trump has said. And so I think that we're pretty close to having the uncertainty behind us, and as you know, when that happens, then the economy really lifts off.
Okay, so the uncertainty, if we get that behind us in April, if it does bring some near-term pain or some near-term juggling or jostling that takes place, how long do you think that lasts, Kevin? Is this a situation where we have tariffs that kick in, they raise prices, and then it takes how long for us to adjust to it?
Here's the thing that a lot of people are saying that, Becky, but the way I like to think about it is, if you think about it this way, that the U.S. has a trade deficit of about 1.2 trillion, and it's been very, very persistent. And so when you ask yourself, why is there a trade deficit that just keeps coming? Why is it that currency markets aren't adjusting so the trade deficit balances the way Adam Smith would say? Well, it's got to be because the supply of stuff sent to the U.S. is extremely inelastic. It's kind of like if you have an apple tree with 100 apples in it, and then you have a tariff, and then all of a sudden, people demand fewer apples. Well, the guy's got to sell 100 apples, right? And so he's going to have to eat the tariff. If he only sells 90 apples, 10 of them are going into the ground and rotting. And so I think that we've got very inelastic supply. That's why we've had these persistent trade deficits. And so the idea that American consumers are going to bear most of the tariff is just not economically literate, frankly. And it's got to be, the only explanation for the persistent trade deficit is that we've got lots of inelastic supply. And so if we put a tariff on foreign countries, then their capital and their workers, they're going to bear a good chunk of that tariff. And I think that then what we're doing is we're changing the tax code so that we're lowering taxes on the taxes that Americans bear and increasing taxes on the taxes that foreign inelastic supply bears. And that's very bullish for America.
Kevin, that's certainly what happened with the tariffs on China that were put in the last Trump administration. It was not passed directly onto the consumer. Much of that was picked up by manufacturing in China. But most economists think that there is a limit to how much can be absorbed before it does come back and really bite the consumer too. Where do you think those limits are? What's a reasonable amount before you think, okay, they can't absorb anymore and they would raise prices?
Well, don't forget there's a huge amount of trade, almost $1 trillion of imports between Canada and Mexico. And one of the things that we talked about from the beginning and then did after we saw some progress on fentanyl is exclude the quote-unquote USMCA stuff. USMCA stuff is 50-60% of all the trade in Canada and Mexico. And to get something qualified as a USMCA good, you just have to have U.S. content. So if there's, U.S. parts that get shipped over to Mexico and then they assemble them into a car, that if you put a tariff on that, then a lot of the tariff is on U.S. parts. That doesn't make sense, and that's why the exemptions are there. And so I would expect that one of the things that's going to happen is that people are going to have lots of levers that they can pull, as the final tariffs are visible. And one of them is having more U.S. content. If you have more U.S. content, then that'll be quite helpful. In the end, don't forget, too, trade isn't the majority of the economy. It's a fraction of the economy. And if there's a little bit of change in the price of things, then you have to say, well, is that also going to affect wages? And as, again, we saw big increase in manufacturing employment in February, which should increase the real wage. And so I think in the end, it's got to be, even with a tariff policy, a prudent tariff policy, that real wages are up a year from now.
It might not be, trade is not everything, obviously, but it is something on the margin. And we do keep hearing again and again, you have to acknowledge this, Kevin, that uncertainty causes CEOs and decision makers, when they're thinking about new projects or deploying capital or where to build something or when to build something. And Andrew has pointed out the merger and acquisition activity that thought would be a big benefit from the deregulation that we're seeing with the FTC or whatever. You're not seeing that. And you are, it seems that you're seeing some hesitation by corporate decision makers to embark on big projects or capital deployment just because of the uncertainty. Will you acknowledge that?
Exactly. Exactly, Joe. And again, I have a paper that's about 10 years old where I wrote a lot about this. What happens is if you have a big, what we call in economics, irreversible project, a thing where you nail it down and then it's not like a used car that you can sell right away, then when there's a big election, then people tend to wait until both after the election happens, which would be November, but also into March or so, where they wait to see is Congress going to be able to function. And in that time period, big irreversible investments tend to slow down. In fact, in the paper that I wrote with Matt Jensen a while ago, I guess this one was with Joe Sullivan, that we found that the relative odds of recession were about double around an election year because people were holding off on the big projects. And so you could think that there's like a tariff effect on that, but really there's an election effect on that Americans have experienced over and over and over again for every election. So and the Kevin, good news is that election uncertainty usually gets resolved around March, which is about where we are.
That's what I was
right
going
now.
to say, though. Kevin, in terms of looking at the numbers, looking at a calendar, between the tariff piece we're talking about in April, between what you're talking about, this sort of investment theory about uncertainty and the like, when would it show up in the numbers? To the extent that you have to plead patience with the American public to say, look, this is all going to work out, but it's going to take a little bit of time. The president's saying that there's a sort of a temporary period here. When do you think we'd be on the set having this conversation and either the markets would look different as a result of this, or the sort of spirits in terms of around the economy would feel different?
I think there's some things that already you're seeing are moving in exactly the right direction. So if you look at what's happened to the 10-year rate, I think that all the spending that we put into our reconciliation package, plus the DOGE spending cuts are going to be on top of that. That's put a lot of downward pressure on interest rates. That's making it easier to buy a car, easier to buy a house. That kind of stuff is being resolved already. I think that the idea about when or how much do people have to move stuff from this country to that country, that's the stuff that I expect will be resolved and visible in April. But the uncertainty over that is already visible in the numbers. That's what I'm saying. So imagine we made 9,000 auto jobs in February, even though there aren't any auto tariffs, new auto tariffs in yet. That's because people are onshoring production, which bids up the wage and makes the welfare of Americans better, just as President Trump said.
I think you had a great Freudian slip there. You said, if you look at all the spending that we put into the reconciliation package, you meant spending cuts?
Spending cuts, yeah, that's right, spending cuts.
You left out, that was so
I spelled the word
Freudian.
cut, yeah.
Because Massey thinks it's spending. He's going, yeah, Kevin admitted it. He's nodding.
Yeah, it's $2.5 trillion. It's $2.5 trillion in cuts.
$2.5 trillion in cuts. All right, Mr. Hassett, don't be a stranger.
Of course, good to be here.
Because the other side's gonna hit in a vacuum. The other side's gonna define the narrative, and you come on and you say stuff that totally defines it from your side, and I like that. It's somewhere in the middle. Don't you think, Sorkin or Becky?
We'll be right. We'll be right. Right before, right again.
Somewhere
Just
in
wait.
the middle? How do we find it? You know what we're looking for? Signal from all the noise. Thank you, Kevin.
Thanks.
Good to have you on.
Up next on Squawk Pod, Bottoms Up this Monday. Just another week in the tariff war. Bravo stars turned co-founders of Mezcalum, Erin and Abe Lichy, are weathering the trade storm.
There are some brands, I think more in the tequila space as opposed to Mezcal, that are hoarding. But when you look at these large corporate conglomerates, they're in a more precarious position. They're not as nimble, where we're a smaller brand and we can absorb, if at all, a short-term margin hit.
This is Squawk Pod.
Up and Andrew, Q.
You're watching Squawk Box on CNBC. For some, it's feeling like 6:06 if you're living through daylight savings time. For those of you in Arizona, you're doing just fine.
Yeah, it's
right.
3:03.
They don't do
Except
it.
everything's so far away between.
That's a separate issue. I'm Andrew Sorkin along with Joe Kernen and Becky Quick. President Trump pausing tariffs on products from Mexico. That is until April 2nd. It's going to matter to our next guest. But if they go into effect, Mexican-made spirits are one category that could see higher prices, including tequila and mezcal. Joining us right now are the co-founders of the Mexican-made beverage company, Mezcalum, Abe Lichy and Erin Lichy. Erin is also, of course, one of the cast members of Bravo TV's Real Housewives of New York. So we are thrilled to have them here. Mezcalum was launched in 2023, served at restaurants all around New York City. Good morning to both of you.
Good morning.
Thank you for waking up early.
Yes,
You
thanks
haven't
for
had
having
any
us.
Mezcalum yet.
Not yet.
Not yet.
I can't have any.
Right this moment,
So-
but it's coming.
No, I'm
I
very
know,
pregnant.
I know, but
I like your style.
in a couple of months. In a couple of months.
A couple of weeks.
In a
I'll
couple
have it at the
weeks.
hospital as soon as I'm ready to go. I'm like, I can't wait.
So let's just talk about the tariff piece before we get into all the other stuff. How is it impacting things, or what are you guys even thinking about in this context?
So for us, we've been expecting this for months. So we took a lot of proactive measures, monitoring the peso versus the dollar. And so some things we've done are enter into forward purchasing contracts where we're able to lock in a really favorable rate on the FX exposure so that it mitigates our margin by about a third. And as a small independent brand, we're able to take advantage of federal excise tax relief, which we're working with our importer. And our whole thesis is, hopefully this is short-lived, if at all. I mean, it should be exempted under USMCA. Can only be made in Mexico.
Where exactly in Mexico is it made?
In Oaxaca.
Okay, and then how many of your friends who are in this business that you know have either done what you've done or are either like hoarding? Are you bringing a lot of stuff here now, trying to get all the supplies here?
Well, we thought about it, but Abe actually said no. I was like,
put the
let's get
kibosh.
all. I wanted to hoard all of the product and bring it in, but it looked like It was going to actually cost us more money.
Yeah,
to
warehousing is
store
expensive.
Warehouse in New York.
So just to stuff the channels and bring product in made no sense for us.
Is that something you think people are doing, though? Are you hearing about that? Like when you talk to the folks who are manufacturing